Choosing the wrong health insurance plan in 2026 could cost you thousands of dollars. Here's what you need to know. Kaiser Permanente stands out for affordability and customer satisfaction. Blue Cross Blue Shield offers one of the largest doctor networks in the country. United Healthcare provides flexible plans and strong Medicare options. Aetna remains a popular choice with competitive pricing and broad coverage. Don't just compare monthly premiums. Check deductibles, out-of-pocket costs, prescription coverage, and whether your doctors are in-network. The best plan isn't the cheapest. It's the one that fits your healthcare needs and budget. Follow for more simple insurance and finance guides.
Welcome to this explainer. You know, today we're going to navigate the incredibly confusing and honestly often frustrating maze of the 2026 health insurance market. To make this a whole lot easier, we're going to help our hypothetical friend, Stickman Sam, journey through the entire process. By the time we wrap up, both you and Sam will be totally equipped to make the smartest possible choice for your healthcare. Okay, let's just dive right into it. Sam is overwhelmed. And hey, if you've looked at health insurance lately, you know exactly how he feels, right? The industry is literally packed with confusing jargon, rising premiums, hidden rules. It's a lot. So we're going to break it all down impartially using the absolute latest 2026 data. We've pulled from top sources like Forbes, LendingTree, and industry journals to give you just the clear, unbiased facts. Here's our roadmap for Sam. We're going to decode the alphabet soup, master the metal tiers, compare the 2026 industry heavyweights, pit United Healthcare against Blue Cross, and finally, find your perfect match. Let's get going. All right, kicking things off with Section 1, Decoding the Alphabet Soup, where we'll be navigating HMOs, PPOs, and EPOs. So before Sam even looks at the prices, he really needs to figure out his network options. Let's start with the HMO, or Health Maintenance Organization. Think of an HMO as having a strict gatekeeper. To get care, you absolutely must stay inside the plan's network, and here's the kicker, you have to get a referral from your primary care provider before you can even think about seeing a specialist. So it restricts your freedom, sure, but it ultimately keeps your monthly premiums much, much lower. This really brilliantly illustrates the stark contrast between an HMO and a PPO, which stands for Preferred Provider Organization. If an HMO is a strict gated community, well, a PPO is the open road. A PPO gives Sam total flexibility. He gets out-of-network coverage, and he has direct access to specialists without ever needing a permission slip from his primary doctor. The catch? Yep, you guessed it. That freedom definitely comes with a higher price tag.
But what if Sam wants something right in the middle? Enter the EPO, or Exclusive Provider Organization. If Sam wants a middle ground, an EPO is a really fantastic hybrid. It restricts him to in-network doctors to save money, just like an HMO, but it usually drops that annoying specialist referral requirement. So, you stay in the network, but you get to steer your own ship. Best of both worlds, kinda.
Moving right along to Section 2, Mastering the Metal Tiers and really understanding how those costs are shared.
Now that Sam knows his network options, how do the actual out-of-pocket costs work? Take a look at the balance here. As your monthly premium goes up, your deductible, which is what you pay before the insurance actually kicks in, goes down. Now, the absolute biggest misconception we need to clear up right now is that metal tiers dictate the quality of your doctors. They don't. No way. They simply dictate how the burden of the medical bill shifts from you to the insurer. So a bronze plan covers roughly 60% of costs, while a platinum plan covers 90%.
To anchor Sam in reality here, let's look at the average cost right now. $590. That's the baseline sticker price for an unsubsidized ACA Marketplace plan in 2026. Now, obviously, subsidies can lower this significantly, but this is the starting point we're working with today.
Now, what's really fascinating about this data is how drastically your baseline costs increase as you get older. Just look at the silver plan trend. At age 30, Sam would be paying around $505 a month. By age 40, it creeps up to $569. But then, by age 60, it absolutely skyrockets to over $1,200 a month. Age is, without a doubt, one of the single biggest factors in your healthcare pricing.
All right, Section 3, the 2026 industry heavyweights. Let's compare the top insurers.
With the foundational basics totally mastered, Sam is ready to objectively compare the market leaders dominating 2026. Based on exhaustive data, here's where the heavyweights really shine. Kaiser Permanente dominates overall value by keeping doctors and insurance under one integrated roof. Blue Cross Blue Shield, that's your go-to for nationwide local reach. Aetna and Molina boast incredibly low state complaint ratios, which usually means happy customers. And United Healthcare flexes the largest overall U.S. network, especially if you're looking at corporate plans.
Let's look at network size, because honestly, this is where the rubber meets the road. If Sam values having options, notice how Blue Cross Blue Shield covers nearly half of all in-network doctors in the whole country. Kaiser, on the other hand, only covers 19%. Why? Because they rely on a much tighter, enclosed loop of care. Sam basically has to decide if he's willing to trade that wide choice for a lower Kaiser price tag.
But before we go any further, we absolutely must impartially report this crucial fact. There is no single absolute best company for everyone. As Blake Insurance Group points out, the right choice completely, 100% depends on Sam's zip code and the specific doctors he relies on. A plan that is incredible in Texas might be absolutely terrible in Ohio. It's just how it works.
Next up, Section 4, United Healthcare versus Blue Cross. It's the ultimate showdown. Let's pit the two absolute giants of the industry against each other so Sam can see how their structures fundamentally differ. Structurally, they're complete opposites. Blue Cross Blue Shield isn't actually one single company. It's essentially this patchwork of 34 local entities that dominate regional and rural areas. United Healthcare, on the flip side, is a single national behemoth that caters really heavily to large employers, big tech, and travelers who need seamless coverage across state lines.
Financially, their pricing models are completely different too. Blue Cross Blue Shield often uses attained age pricing, meaning it might start out cheaper for Sam today, but his premium is going to climb every time he hits a new age bracket. United Healthcare frequently uses community-rated pricing, which means flatter, way more predictable long-term rates over a decade.
And what if Stickman Sam were a senior shopping for Medicare Advantage? Well, here, United Healthcare clearly boasts a larger footprint. They operate Advantage plans in 46 states compared to Blue Cross's 31, and a massive 59% of United's plans are $0 premium options. If Sam is on a fixed income in retirement, those numbers are pretty hard to ignore.
Finally, Section 5, Finding Your Perfect Match. Let's look at some actionable steps for your lifestyle.
So who are you in this market? If you're a healthy 30-something like our baseline Sam, you probably just need basic protection, a bronze-tier HMO to keep your premiums rock bottom. But hey, if you're a traveling consultant, you absolutely need a PPO with a broad network like Blue Cross. A family manager with kids, you might want a silver or gold plan with United Healthcare's vast network. And a retiree should focus entirely on Medicare Advantage and their specific prescription drug tier lists. Basically, your daily lifestyle dictates your plan. To guarantee you make the right choice, always follow these 3 actionable steps. 1. Don't just guess. Actually check the doctor networks by your exact zip code. 2. Verify your specific daily prescription drugs against the insurer's tier list. And 3. Do the math. Don't just look at the monthly premium, calculate your total yearly out-of-pocket maximum to see your true financial risk. I'll leave you with this final provocative thought as you shop the 2026 market. Are you paying a premium for a massive network of doctors you never even see? Are you paying for a PPO when an EPO would do the exact same trick? I strongly encourage you to analyze your own personal habits, your health, and your zip code before signing up. Thanks for joining us on this explainer, and hey, happy shopping!